Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be taking a look at Zoom stock, ticker symbol ZM. So I hope you guys enjoy it, and if you guys do, make sure you guys smash the like button. Also, if you guys want to learn how to properly analyze stock, fundamental and technical analysis, go ahead and check out my course. You guys can get 50% off using the promo code ZOOM, Z-O-O-M. So make sure you guys check that out. That will be the first link down below. So now let's jump into it. Roll the intro. Let's go. Bam. Now this year's Zoom stock is actually one of the most sought after stocks out there. The reason why is because it's already up around 500%, and a lot of people think there's still opportunity there, and there kind of is, but honestly a lot of people kind of have a little bit of FOMO with this stock, so they want to kind of invest in it, which is making the stock a little overvalued. Now on the revenue side, they did make around $664 million, which is an overall 335% increase, which is really nice. Also, their last quarter, they almost doubled what analysts thought they would make in their earnings. Analysts thought they'd make around 0.45, but they actually made around 0.92, which almost doubled what analysts thought, which made the stock actually rise around 25% before selling off a little bit today. They do have around $1 billion in cash, which is actually really nice because they can use this money to grow their business more, and they can use this money if the company kind of slows down a little bit and they still need to pay off some things. Now they do have around $60 million in long-term debt, which is not a big deal. Companies take on long-term debt all the time. Look at Apple, Amazon, Ford. Look at all of those blue chip stocks. They do take on long-term debt. It's super common. You just want to make sure it's something not super outrageous like Ford. You want to make sure that it's kind of something that they kind of know they can pay off. $60 million, and they have $1 billion in cash. Really nothing to be worried about at all. One thing that should make you a little worried is their price to earnings ratio. Their price to earnings is around 482, which is super overvalued and really is classifying this stock as a growth stock. So if you think this is like a blue chip stock, I would not advise buying anymore. Kind of re-diversify. Also, this stock definitely has some up and down. And one thing, when a stock goes up, almost always it continues to go down. So make sure you guys understand that rule. So now here's what we're going to do. We're actually going to turn to the computer, look at support, resistance, and kind of where I see this stock in the future. Let's do a little bit of technical analysis. Let's go. Bam. Alrighty guys, so we have ticker symbol ZM, also known as Zoom Video Communications. You guys can see that this stock did have some old resistance here at around $100, old support here at 60. It's probably never going to hit that again, so we don't even have to worry about it. Now in early 2020, we just had an explosion in buying pressure. The reason why is because people were using their services, which made the company make more money and make their company worth more. Now this stock does have a beautiful upward trend, and honestly it does look like there's like no real resistance in sight. Old resistance here at around 169, some old resistance here at around 284, but honestly it broke out of those with ease, and it is kind of using this 9 moving average line as support here. So you guys can see almost every time it came in contact with it, it did get some buying pressure, which is really nice to see. So now we can kind of use that as our support line. Resistance, super hard to say, but we kind of have a good understanding that once the stock was at around $478, we did get some sell-off. So technically we could use that as our overall main resistance line. So honestly, for this stock, I do think this is a temporary stock. What I mean by that is right now, this company is making a lot of money because of this pandemic. And once people and once students are able to go to school, I think that Zoom is going to lose some revenue. Another thing too is once all businesses are able to stay open and they don't use their service, I think that they're going to lose revenue. And I do think the reason why it's up so much is because what just started? School just started, which made a lot of schools actually use Zoom and made their revenue go to the moon, which is nice to see, yeah, because Zoom's doing well. But you always have to look at the future for this when you guys are buying and evaluating a stock. So I do think that right now, for me personally, this is a stock that is, I already missed the opportunity. And I do think for us to double our money, really this company needs to double in size. And people are continuing to start going out more and stuff like that, and that's what kind of people want, and I think that this stock is going to get in the way of that. Another thing, Does this mean, Carter, that this stock's going to sell off to $100? Absolutely not, because they did make revenue. They did make money, and the company is worth more. So now when people and companies want to work remote, I think they're going to use this service, which is going to make it kind of valued at around $200 a share. That's kind of where I see it. I think we'll get around a 30% sell-off in this stock here. But honestly, I could be completely wrong. But if you guys are going to buy this stock, here's what I would highly recommend. One, use the strategy dollar cost averaging. It's one of the best strategies out there, so you guys don't invest one lump sum of money right now and have this stock be overvalued. That's the best strategy. You use dollar cost averaging. You buy maybe $20 or $30 of this stock a week or a month, and you have that, average price throughout the year. It's the best strategy out there. Number two, have a nice solid base of ETFs and or bonds to act as your defense. This stock is definitely a temporary or a short-term growth stock. So I'm gonna be super interested to see what happens once things open up more. So that's kind of my thought process on it. Me personally, I'm staying away from it, due to a couple reasons. High PDE ratio, a little overvalued on the RSI, and you always have to look at, well, if I want to double my money, how is this company going to perform in the next couple of years? So that is it, though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. Don't forget, you guys can check out my course. Use code ZOOM to get 50% off the course. Make sure you guys check that out. And yes, for this stock, I would highly advise to have a nice solid base of ETFs and or bonds to act as your defense, because I can definitely see some sell-off in the near future once people start going back out, once people kind of start going back to school. The revenue's definitely going to slow down. But definitely check them out. Let's go. See you tomorrow. Take care. Bam.